Hello and welcome to Market Today. I'm Siddharth Zarabi and joining me now is Rajneesh Karnatak, the Managing Director and CEO of Bank of India. Mr. Karnatak, welcome to the show. Good set of numbers. Take us through the key operational highlights.
Yeah, as regards the Q1 results for FY25 is concerned for Bank of India, we have given a good growth as far as the domestic credit is concerned at around 17%. Global credit has grown at around 15%. On the deposit side, the deposit, both domestic and international global deposit also overall together has grown by around 9.8%. So that is as far as the growth numbers are concerned. As regards the asset quality is concerned, our gross NPA has come down to 4.62% and our net NPA has come down to 0.99%. So these are the broad outline numbers. Profit has also increased to 1703 crores and the increase in on a YOY basis at around 10%.
Mr. Karnatak, net interest income has also gone up and there's a marginal improvement in your margins. Can you take your shareholders through what are your expectations for NIMs for the rest of the year?
Yeah, if you see the NIMs of Bank of India, we have been sequentially improving our NIMs. So in June 23, our NIM was at 3.03. Annualized basis, March 24, it was at 2.92. Now we have shown it at 3.07%. It is at the backdrop of the cost of deposits and the cost of the yield on advances which we are getting. So yield has improved in advances has increased by 50 basis points and now has touched at 8.60%. Our cost of deposit has touched 4.82% and the gap between the two is at 3.78%. So against that healthy gap, we have been able to show a good NIM of 3.07%. So as far as the guidance on the NIM side is concerned, considering the fact that there are certain pressures with respect to the resources side, both in terms of raising CASA deposits and also on the retail term deposits and the bulk deposit side is concerned, we feel that as on March 25 on an annualized basis, yield should be shade below 3%. Considering the fact that these challenges are there. However, let me reiterate that we have a very strong franchise. If you see our domestic numbers on the liability side, only 14% of our total deposit is bulk deposit, remaining 86% is either CASA or retail term deposit. So being a very strong franchise with liability franchise, we still considering the market scenario, we feel that the NIM may be shade below 3% on an annualized March 25.
Right. Mr. Karnatak, since you spoke about the challenges as far as deposit mobilization is concerned, can you take our viewers through what are your specific plans in this regard? Is there any particular strategy you think will be implemented, including also at the macro level as far as deposit mobilization is concerned?
So if you see our numbers on a sequential basis from March 24 to June 24, our deposit growth has been more than the credit growth. So this is one main highlight which is not there for the other banks. Our deposit in this quarter had grown better than our credit growth. So that is one thing. Already strategies are in place. Field is working on that and we are committed to increasing our resources and retail franchise. Already we have posted 82 officers in our field GM offices and the zonal offices who are only KRA and KPIs on the taking the resources basically which is the term deposits and the CASA. Number two, what we have done, we are trying to do a lot of tie-ups with corporates, with education institutes, hospitals, also with public sector, central and state public sectors and central and state governments for garnering accounts through which tie-ups we can do and improve our segmentation in the saving book as far as that is concerned. Another thing that we are doing is that we are also trying to have more of digitized products on the liability side and increasing the products also with the packaging along with the demat accounts and also mutual fund selling of mutual funds so that the stickiness in the CASA increases, and also we are trying to increase the number of products which we are trying to offer on the saving and the term deposit side. That is the strategy we are trying to adopt in able to increase the resources side and the liability side of the bank.
Mr. Karnatak, talk to us about your global business portfolio that's grown as I understand, almost 12.34% on an annualized basis. What do you foresee happening as far as the global business portfolio is concerned?
So if you see our overseas numbers, we have touched the overseas number at 2 lakh crore plus. That is the number we have closed at. 1,08,000 crore outside approximately is the deposit and around 90 to 93,000 crore is the advance portfolio. So let me inform that all our centers, overseas centers are in profit and margins are also there. in all the centers. NIM also is 1.25%, and even the foreign subsidiaries which we are having, all of them are in profit. So internationally, business is doing well. Globally also, we feel that there will be growth both on the deposit side and on the advances side on our international business, which is also growing on a sequential basis, on a quarter-on-quarter basis.
As far as the cost of deposits is concerned, and I'm dialing back on your earlier answer, what do you see happening as far as cost of deposits is concerned? How did the first quarter pan out in this regard?
So cost of deposit, as I told you, that it is at around 4.8%, and it has increased by 60 basis points, wherein the yield on advances increased by 50 basis points. Still the gap is at around 3.62%. That is why we could maintain the healthy NIM of around 3.07%. But definitely cost of deposit will go up in the coming quarters because retail term deposits will be a challenge, and even bulk deposit rates are higher. However, we are very clear with our strategy in order to improve the margins, because on yield on advances we try to improve further, keeping in mind the cost of deposit which is rising. If you see what we have done over the last 15 months is, the last time RBI raised the repo rate was in January 2023 from 6.25 to 6.50. Since then, from February 23 to till date as we speak, we have increased our MCLR by 6 to 7 times, and present our MCLR, 1 year MCLR is 8.95%, which was at that time in February 23 only 8.40%. So the credit cost increase, the deposit cost which has come has been passed on to the borrowers, and 55 basis points we have raised our MCLR. And majority of our lending that we are doing now on the corporate side is on MCLR only, and the lowest MCLR with us is the overnight MCLR at 8.15%. So we are very conscious that though the cost of deposit is rising, but we will also be improving our yield on advances so that the margins are protected for the bank.
Since we are on the cusp of another review of monetary policy by the committee, what are your comments about expectations as far as the MPC's rate setting agenda is concerned?
So as far as the commentary which is going around in the media and on the press also from the economists in general, we feel that there may not be any cut at present, and there may be a pause in the MPC. This is what we feel from the various commentary which is coming out.
Do you also agree with the view that many economists have expressed that December is the possibility where they see a rate change in the rate scenario?
Yeah, we also feel the same way that Q3 will be the one quarter where we can see some reduction in rate of interest. US has not raised the interest rate. Japan has raised some interest rate, and UK has England. Bank of England has also in fact reduced the interest rate. So there are mixed signals globally also. But we also feel that Q3 will be one quarter to watch for as far as the reduction of rate from the RBI side is concerned.
Are you seeing any change as far as consumption is concerned, particularly, for example, from the home loan segment or other retail segments?
So as far as our bank is concerned and other data which is available from the RBI, so there is big growth which is coming in the retail segment, both on the housing loan side, personal loan segment, education loan, vehicle loan. There is a good robust growth over there. Not only banking system, even NBFC is showing good growth over there. And with the kind of population which we have, middle class population, and the economy the way it is growing, and we are already the 5th largest economy, there is a huge potential as far as the retail growth is concerned in the country. And definitely we are also part of that. And our retail book, if you see our slide, our retail book has grown by around 20%. So that's a healthy number for the growth.
Mr. Karnatak, what is the bank's view as far as MSMEs are concerned? Their specific challenges continue, but what is your strategy as far as exposure to this sector is concerned?
So we have a very clear strategy as far as the MSME is concerned. So we have 100 plus underwriting centers in the MSME, which are working full-fledged, and lot of proposals are coming there, and lot of pipeline is also there in the MSME side. If you see our growth numbers on the MSME, there also we have shown a growth of 13% plus, which is a healthy growth considering all the factors. And stress is also not much of a concern, though there has been some SMA and some slippage in MSME, but that is a normal slippage which happens in a bank of our size. So we do not foresee any challenges as far as MSME is concerned, and a good growth in MSME segment also we will be showing in this current financial year.
All right, Mr. Karnatak, thank you very much for taking out the time to decode the first quarter performance and sharing with us some of the specific outlook parameters that you are working on. Thank you very much for your time with us today. With that, it's a wrap on this conversation with the Bank of India. We'll be back with more. Until then, good.